With news breaking that the Clarity Act vote is coming next Thursday, markets have absolutely exploded. We are seeing a full green wave right now. Money is flowing back in. We're also hearing from senators about what they think is about to happen with the Clarity Act. And we hear from Mark Yusko, who actually thinks the Clarity Act is not going to be a good thing. He's got the complete opposite opinion from most people out there. We're also going to hear from other industry experts about how tokenization and the Clarity Act are going to change the game forever. So yes, there are a lot of mixed opinions here. Let's go through all of it. This is all brand new information. Let's get into it. Alright, let's start with the market. If you take a look at the last 7 days, it is beautiful, guys. You've got Toncoin up here. Zcash is up 51%. It has been absolutely on fire, growing over $1 billion in market cap in just the last few days, which is really incredible. Jupiter is up 44%. Filecoin is up. Near Protocol. It is just really great to see all of these green candles across the board. It really does look like either people are starting to put serious money back into the crypto space, or maybe, just maybe, retail investors are coming back because they believe something big is about to happen. Right now, we are sitting at a 74% chance of the Clarity Act getting done. Now, this is actually not the high point. The high point was 82% back on February 19th, so we will see how this all unfolds. Brenton Peter has put out some really important scheduling information. The markup is set to start at 10:30 a.m. Eastern Time this Thursday. For anyone watching from anywhere around the world, mark that time. The manager's amendment final text is going to be circulated on Monday, May 11th. So we'll get a look at what the bill actually says on the 11th, giving roughly 3 business days before the 14th to suggest changes, amendments, or modifications. There are still some bracketed areas in the bill, sections that could be deleted, reworked, or completely replaced. And according to 2 sources familiar with the announcement, the Senate Banking Committee has officially noticed a markup for Thursday, May 14th, to advance the crypto market structure legislation. This is real. This is happening. Senator Cynthia Lummis is pushing hard for the Clarity Act to move forward with the Banking Committee on Thursday. She put out some really fired-up tweets. She said, and I'm quoting, "The United States will lead the way on digital asset innovation. Let's pass the Clarity Act out of the Banking Committee on Thursday. Let's do this." And she posted the laser eyes emoji. You know what that means. So it is looking pretty bullish for the Clarity Act right now, guys. Look, obviously anything can happen. I am expecting some shenanigans to come out of the woodwork to try to derail this bill at the last minute. But it genuinely feels like a lot of senators on both sides of the aisle are eager to get this thing done. And America might actually take its place as the real crypto capital of the world. So, what does the Clarity Act markup actually mean? Let's break it down. What this really does is unlock everything else. It unlocks the rest of the market structure bill. It opens the door to getting that markup done and hopefully getting this to the president's desk sooner rather than later. I feel very confident about where we are right now. We're expecting the markup to land on either the 13th or the 14th of next week. It could potentially slip into the following week. We're hoping it doesn't, but it will be soon. From everyone I've spoken to in government, all signs are pointing toward next week. The committee is ready. Both Republicans and Democrats are saying, look, we were supposed to do this back on January 15th. It is now almost exactly 4 months later. The stablecoin debate is settled. The rest of the bill has been negotiated, refined, and worked on by staffers who've been reaching out to industry stakeholders on every single other piece of this legislation. Democrats are ready. The conversations with the chairman's office, Chairman Tim Scott, the Senate Banking Committee staff, members on the Republican side, they have all been overwhelmingly optimistic. I feel very good that next week we will have the committee markup. Now, Washington is famous for missing deadlines, so if it does get pushed back a week, you might be looking at something like the 18th or the 21st, but we really do need to get this thing done. Stuart Alderoty from the Senate Banking Committee called the May 14th markup a hard-earned milestone, adding that Washington has a narrow window, and we should not waste it. And then Senator Bernie Moreno said, and I love this, let's effing go. Just pure passion, pure energy. You love to see it. That is someone who wants to get this across the finish line. Now, here's where it gets interesting. Banking groups have launched a coordinated push to revise the stablecoin yield provisions ahead of the expected markup. This is exactly what I was warning about. things in the background that could affect the final bill or the language inside it. It looks like they're trying to cross out certain language and replace it with something more firm in their favor. Now, Senator Tillis and Senator Brooks, Republican and Democrat, who have been leading the negotiations with the banks, they basically told the banking groups, "You've had months to tell us what you want. This is what we came up with. You have to live with it now." And yet, the banks are still trying to make changes behind the scenes even after that statement. So watch this space. Now, Mark Yusko just said something that nobody really wants to hear right now. And look, people have been asking me, is this going to cause a massive boom for the crypto market? Or is it going to be a sell the news event? I think we need to look at this through both lenses. We need to understand it could genuinely go either way, and Mark Yusko lays this out very clearly. Listen closely. Yusko says, don't frame the Clarity Act as a landmark bill that will ensure financial freedom, because just like he always says, the name of every act is the opposite of what it actually is. The Genius Act was not very smart. The Clarity Act is not very clear. The Jobs Act didn't really create jobs. The Inflation Reduction Act actually created inflation. His point? The Clarity Act is fundamentally about walled gardens, just like the accredited investor standard was sold as protecting the little guy, when really it protected the big guys from having to share the good investment opportunities with regular people. The Clarity Act, he argues, is designed to make sure that only those who utilize the technology, particularly stablecoins backed by dollars, meaning government debt, qualify. Everything else is window dressing to provide a veneer of regulatory clarity. And the key issue, whether you can pay yield or interest on these instruments. The answer in the bill is no, but you can offer rewards. Which, isn't that the same thing? And here's the real kicker. Only certain entities can offer those rewards, meaning the spread stays with the banks and the big exchanges that control the stablecoin flow, which, according to Yusko, is the complete antithesis of financial freedom. All right, so there are skeptics on the Clarity Act, and I get it. You absolutely want to look at all sides and come to your own conclusions about whether this is going to be good for retail investors or really just good for a select powerful few. It does appear that the bill as written empowers large financial institutions and the biggest players, your Coinbases, your Ripples, your Circles of the world, while maybe leaving the smaller players to fend for themselves. That is a legitimate concern, and it deserves to be said out loud. Now, I want to play this next clip because it is bigger than most people even realize yet. We are seeing banking giants JP Morgan and MasterCard linking up with Ripple to execute a historic U.S. Treasury settlement via the XRP ledger. Now look, we see proof-of-concept tests like this all the time, but here's what you need to understand about what is actually happening. We are getting ready for the Clarity Act to pass. Institutions are going to start onboarding and using this technology at scale. So, when you have successful tests like this, it leads directly to real-world adoption. JP Morgan, MasterCard. When times are ready to rock and roll, when these giants are ready to deploy this technology for real, who do they pivot to? The XRP ledger. They just announced the successful completion of groundbreaking financial tests. Two of the world's most powerful financial companies worked together to move a tokenized U.S. Treasury across international borders using the XRP ledger. Does it get any bigger than that? And here's the prediction. You are going to see more of this. Now that institutions are ready to actually invest, use, and adopt this technology, your JP Morgans, your Goldman Sachs, they are going to be all about the XRP ledger. It's just a matter of time. Mass adoption is upon us. And then from digital asset investor, here's something important about how the Clarity Act changes things for the SEC specifically. The Clarity Act is going to empower the SEC in new ways, giving it better tools to provide clarity to the market in areas where it currently has restrictions based on how securities laws have historically operated. In that sense, it will actually supercharge the SEC's ability to bring more clarity into the market. But the second, and perhaps bigger, piece is durability. The Clarity Act ensures that certain things cannot simply be reversed through a rule repeal or by a subsequent administration. When Congress acts, it carries a staying power that executive rulemaking simply does not. And that durability is something the industry desperately needs. There are enormous benefits to what Congress can do here. And then we have the smartest man in crypto, Chris Giancarlo, who laid out exactly what this new frontier of digital assets means for the U.S. financial system. Back in 2020, they looked ahead into the future and said, the future is going to be dominated by digital networks of value, whether that's Bitcoin, Ethereum, Solana, or other networks, and whether it's the digital yuan offered by China or the digital euro from Europe. With that reality coming, the key questions became, how do we future-proof the dollar for this world? How do we preserve its reserve currency status? And critically, how do we make sure the dollar continues to enable financial freedom, freedom of financial expression, freedom of economic activity, the right balance of privacy and law enforcement? The Digital Dollar Project applauds America's approach of unleashing the private sector to develop stablecoins, a modernized form of the digital dollar. They're not a sovereign instrument, they're a commercial liability, but they are a genuine form of dollar innovation. However, Giancarlo does express disappointment that the Genius Act, while authorizing private sector stablecoin innovation, does not provide meaningful privacy rights. In fact, it places the existing Bank Secrecy Act surveillance regime directly on top of stablecoin innovation. So we've moved the ball on digital money, but not yet on digital privacy. Now, I did want to play this next clip because it was a really fantastic explanation of why tokenized stocks are going to overtake the traditional market. This is a game-changer conversation. For those who are a little more on-chain, here's something important. If you're trading tokenized stocks on platforms like Jupiter right now, there are actually about 7 different versions of NVIDIA floating around out there, and this fragments liquidity and completely stifles growth and volume. But here's where it changes. If the token is the actual share, if it has the regulatory and legal backing of the transfer agent, the issuer, and the SEC's taxonomy framework for tokenization, then you know you are buying actual Tesla stock, actual NVIDIA stock. The real thing. This fragmentation problem has been one of the biggest things holding back the growth of public equities on-chain. But companies like Securitize are now doing this in a massive way, doing issuer direct sponsoring with transfer agents. And when this becomes more popular, and when companies themselves become comfortable issuing their shares on-chain, the way Galaxy already did, we are going to see real-world asset tokenization overtake DeFi total value locked by next year. And I want to show you this, a brand new Wall Street Journal article on the convergence of Wall Street and crypto, and what it means for the future of digital assets. The quote that hits hardest, you look around and the largest asset managers in the world, the largest banks in the world, everybody is here. If this is a bear market, I'll take it. The announcements this week reflect exactly that shift. Ondo Finance completed the first near real-time cross-border redemption of a tokenized U.S. Treasury fund. JP Morgan, Connexys, MasterCard, and Ripple were all involved. Ondo was selected to the DTCC's Industry Working Group alongside BlackRock, Goldman Sachs, JP Morgan, and Ripple, working together to literally shape the future of tokenized finance in the United States. The convergence of Wall Street and crypto is no longer theoretical. The institutions are here. The infrastructure is being built, and tokenization is at the absolute center of all of it. And then you have BlackRock putting out a public statement saying, with the right regulatory framework in place, stablecoins can improve the payment system and drive new forms of financial utility, including real-time settlement. BlackRock, putting out public policy advocacy for stablecoins. That tells you everything you need to know about where this industry is heading. So here's where we stand. Crypto has completely flipped the switch. Institutional money, corporate backing, large financial institutions, money managers, custody platforms, they are all here and they are getting ready. The infrastructure is in place. What this industry needs now is the Clarity Act. Once the Clarity Act gets signed into law, the rules of the road are set. The industry can genuinely take off. Whether we're talking about 5 trillion, 10 trillion, 50 trillion, or even 100 trillion in total value, who knows exactly where this goes. But we are expecting big things to happen quickly, and the Clarity Act is what starts it all. So I am excited. I genuinely am. Have a great weekend, everyone. Let me know what you think about all of this in the comments below. Like the video, share it, comment. It is always an honor to spend this time with you guys. Aloha.